What's up everyone, it's HeeVee here. Robinhood is planning to go public later this month in what might be the biggest IPO of the year. After the significant controversy they endured earlier this year, I wanted to go over this IPO and give you all the information you need to know. Today we will discuss the company and their growth, details of the IPO, recent controversies, and what going public will do for Robinhood. So let's jump right into it. First, let's talk about what Robinhood is. Robinhood is an online trading platform that offers commission-free trades in a variety of financial assets. Founded in 2013, they were the first shop to offer commission-free trades, which has since become an industry standard. They offer trading in stocks, options, and crypto, but not commodities, futures, or pink sheets. This is fine for beginner and novice traders, but for the more advanced traders that want to get into some of these maybe penny stock trading, futures trading, or commodities trading, it can definitely be limiting. Also, their crypto trading is limited to only a handful of coins, and most altcoins are not supported. In the 7 years since inception, they have raised over $5.6 billion from 52 investors in 21 rounds of funding. So now that you have an idea of what the company is, let's go over the enormous growth that they have seen, especially in the past year. Robinhood has seen an explosion in their user base since early 2020. On their best day in 2020, they signed up over 140,000 people. However, that number would be more than quadrupled in early 2021 when they signed up over 600,000 new members in one day during the Gamestop crisis. They finished January 2021 with over 3 million new accounts that month. That's over 100,000 new accounts every single day. So it appears all the negative press from the trading shutdown was actually a net positive for them. Their user base is now estimated to be in excess of 20 million, which is over a 50% increase from the beginning of last year. To put this in perspective, that number rivals and actually exceeds many of the legacy brokerages. For example, Charles Schwab has 29 million users, while E-Trade has only 5.2 million and TD Ameritrade comes in at 11 million. So obviously there has been significant growth in this company, but what does that mean for their valuation? Although Robinhood is a private company, there are ways to get an idea as to what their valuation might be. According to Rainmaker Securities, which is a secondary market for trading shares in private companies, recent trades of Robinhood shares have indicated a valuation in excess of $40 billion. This equates to a 100% gain from their previous estimate of $20 billion back in December of 2020. So this is extreme growth. But what can this all be attributed to other than just the hype surrounding Robinhood and all the attention from the GameStop mania? A lot of this can be attributed to their insane growth in revenue. In 2020, Robinhood increased their revenue 6-fold, and a lot of this was due to their increase in payment for order flow. If you don't know what payment for order flow is, I recommend you go on YouTube or Investopedia and look up what it is. I won't be explaining it in this video since we're going to stick to the IPO. Robinhood has reported revenue of $682 million for 2020. As I mentioned, that's a 6x increase from the year before. Now, a $682 million revenue plus a $40 billion valuation means that they're trading at roughly 60 times earnings. To put that in perspective, that is double what Charles Schwab trades at. This means Robinhood will be an expensive stock relative to other players in their industry. So now that we know a little bit about the company and their incredible growth, let's go over some of the details of the IPO. Currently, the IPO is rumored to take place on March 31st, a mere 3 weeks from now. They have hired Goldman Sachs to do a traditional IPO rather than a SPAC, which will allocate shares to underwriters and investors. The IPO process involves a roadshow in which Goldman Sachs and Robinhood management will raise money by selling shares to investors and institutions. Traditionally, IPO shares have been reserved for accredited investors and people inside the company. Retail investors like you and me are left to buy this thing after it opens, which is usually at a hefty premium. However, surprisingly, Bloomberg reports Robinhood has set aside a significant number of shares for their user base. Now, the exact number of shares is unknown, and how they will distribute those to their 20+ million users does present logistical challenges. However, Bloomberg also reports that one of the drawbacks to allowing retail participation in the pre-IPO allocation of shares is that it could dampen the rally that IPOs generally see on their first day of trading. Basically, the suits can't make as much money. Many recent IPOs have doubled on their first day of trading, with Airbnb going up 115% on their first day back in December of 2020. If Robinhood actually does end up allowing their users to buy pre-IPO shares, I could see it being somewhere like 1 or 2 shares, but they're not going to let you load up on like 200-300 shares. So now that we know more about the IPO, let's talk about what effect that GameStop scandal might have had. As I mentioned earlier, the GameStop scandal ended up doing a great deal of good for Robinhood as far as awareness goes. Robinhood became a household name after January, and Google search trends reflects this. If we look at this chart, we can see searches for Robinhood reached the highest level ever on January 28th, and it wasn't even close. It's safe to say January was a net positive for them. But that's far from the only controversy Robinhood has found themselves in. Last December, the SEC filed charges against them for misleading investors about where the majority of their revenue comes from. The charges alleged that Robinhood, quote, made misleading statements and omissions in customer communications about its largest revenue source when describing how it made money. Basically, they weren't telling people that they make the majority of their money by selling your orders to big market makers like Citadel. Unfortunately, the result was the two parties settled, and Robinhood agreed to pay a $65 million fine while not admitting any wrongdoing. But they are also facing 3 lawsuits for outages experienced in March of 2020. One of those outages occurred on the day that the S&P saw its biggest dollar gain in history, and Robinhood users were not able to trade it. Furthermore, the state of Massachusetts has issued a complaint against them for targeting inexperienced investors and not protecting them. These are all in addition to the myriad of class action lawsuits they are currently facing, namely in the Southern District of New York, regarding their decision to shut down buying in GameStop and many other big meme stocks back in January 2021. Many people allege that the shutting down of buying caused the stock to tank and thus caused massive losses across the board to anybody that was invested in any of those tickers. At one point, there were 50 tickers that you could not buy and that were position closing only. However, despite these past events, Robinhood is still planning on going public this month. So let's see what kind of benefits they could get out of doing this IPO. The first benefit is that Robinhood will be able to raise significant amounts of money. As I stated earlier, they have already raised over $5 billion in their history. Depending on how many shares they decide to issue and what the valuation of the company is, they could definitely double that $5 billion number. Now, these funds could be used to pay down existing debt, invest in research and development, hire some customer service representatives, or whatever else they choose to do with $5 billion. Also, this newfound liquidity from being traded on public markets will tremendously enrich investors and the founders, as they will be able to exit their company in a highly liquid market. Oftentimes, this is what private equity funds and venture capitalists have in mind when investing in startups. Another benefit is that IPOs usually generate a lot of attention for the company. I mean, as you can see, I'm creating this video right now about Robinhood, which I wouldn't have made otherwise. The uptick in media attention will certainly increase their user base, thus increasing revenues and profits. However, there are also drawbacks to an IPO. They will now be required to disclose significantly more information. One of these things is they're going to have to talk about where all of their revenue comes from and break it down by source. The other thing is that they're going to have to adhere to GAAP accounting, which is generally accepted accounting principles, the accounting guidelines that all public companies in the United States must adhere to. Also, they will be beholden to shareholders and thus required to act in shareholders' best interest. Elon Musk has had plenty of gripes like that because shareholders' best interest is to increase the stock price, which doesn't necessarily translate into making the company better. Let's do a quick recap of what we just covered. Robinhood will likely go public at the end of March. They have had tremendous growth in almost every aspect of the business, including legal disputes. They have more users than E-Trade and TD Ameritrade combined, and have increased their user base by more than 50% in the last year alone. Going public will help them raise billions more dollars and give them tons of free press. After all, this will be one of the biggest IPOs of the year. So now that you know all this information, I have a question for you. If you were given the opportunity, would you buy shares in the Robinhood IPO? Let me know in the comments down below. Thank you for watching my breakdown of the Robinhood IPO. If you learned something, please hit the like button. If you want to know more about this kind of stuff, like the Coinbase IPO, which I will be covering next, hit the subscribe button. Folks, this has been HeeVee. I hope you have a good one, and I'll see you in the next one.